Good morning, everyone. Welcome to an episode of the Mizuho Week Ahead. I'm Boon Heng, market economist at Mizuho Bank. This week's theme is spending woes and threats. Undoubtedly, last week has been about upsized capital spending, with Amazon and Alphabet joining Microsoft, announcing significant ramp-up in capex spending. Admittedly, some have referred to these upsized investments as the AI arms race. From a simplistic game theory perspective, this multiplayer, multi-stage business dilemma with potentially asymmetric payoffs imply that coordination remains elusive and accelerating investments is par for the course. That said, this does not absolve worries about insufficient returns from the upside spending, as reflected by the result sentiments last week, with tech stocks plunging. To be clear, threats also stem from Anthropic's release of new models and plugins that dented the legal and financial services providers. On the macro front, US economic data displayed relative resilience, with ISM manufacturing outperforming, while ISM services index remained well in expansionary territory, but with some underlying soft spots in new orders and employment. Across Atlantic, the ECB held rates as widely expected, with Lagarde reiterating that policy remains in a good place. In contrast, the Bank of England's dovish rate hold in a 5-4 outcome, with Governor Bailey casting the swing vote to hold, came alongside an affirmation that there remains room for rate cuts in 2026. Down under, the RBA became the first major central bank to hike their policy rate, as they alluded to a delayed return of inflation back towards target as they lifted their inflation projections and alluded to higher than expected household spending and investments in Australia. Government Bullock added that they are monitoring if stronger inflation is persistent or temporary, to the extent that the economy is capacity constrained. In Asia, Indonesia faced another bout of headwinds last week, as Moody's revised their ratings outlook lower to negative. To be clear, the headline triggers are symptoms, not the primary causes of underlying rupiah pressures. It is the sustainability of fiscal spending and potential governance worries that has led to the current bout of rupiah weakness. In India, the rupiah outperformed last week on the US-India trade deal, which saw their tariff rate decline to 18%. Even though the devil is in the details of the investment deal, markets will also keenly await the joint statement which will affirm the lower tariffs. Any delays would put to question the durability of recent rupee gains. We are heading into the week having elections concluded in Japan and Thailand. In Japan, PM Takaishi's commanding win with the LDP's sweep of the lower house and a resounding supermajority for the ruling coalition are legitimate reasons for Japan optimism, which corresponds to bullish equity markets. But the bearish yen and JGB legs of the so-called Taikaichi trade may be misguided. For one, it is erroneous to conflate sweeping fiscal mandate for impending profligacy. Quite the opposite, as PM Takaichi's political capital paves the way to avert suboptimal fiscal compromises, providing clarity on fiscal sustainability. Furthermore, Japan's significant holdings of foreign assets, as the world's second largest net creditor, puts it in pole position to reallocate back home Japanese assets to the benefit of the yen, JGB, and equities. In concert, bullish Japanese equities are primed to be met with measured yen rebound and some degree of pullback in JGB yields, given exaggerated risk repricing. The other incumbent in Asia, who also had a short tenure before calling for elections, in Thailand, PM Anutin's Bumjai Thai Party, is set to win the elections in Thailand. Within the 4 short months term, his government saw the rollout of fiscal measures and also presided over exerting military pressures on Cambodia. Nonetheless, the 194 seats is insufficient for the majority, and as such, coalition talks will be watched this week. These election outcomes so far are a positive for Thai baht at the start of this week, and holding on to these gains will be dependent on the process of coalition formation. All in, even in a data-light week in Asia, all eyes may be on the US inflation and the NFE print this week. But keeping a close watch of fiscal trajectories and political paths in EM Asia is certainly warranted. For more information, please refer to our week ahead publication or contact your respective sales desk and RMs. And for our regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you.